She's joining us from Singapore. Hi, Sonal. Always a pleasure chatting with you. How would you read what's really unfolding today at the moment? Was it a case of market participants having sky-high expectations ever since the markets got a whiff of the fact the Prime Minister would be holding a review meeting? I think all kind of measures were being talked about, whether it was FCNR, and really the expectations were we were going to see a big rescue package. However, the Prime Minister, the RBI Governor and the Finance Minister have decided on 5 action points, which also includes disincentivizing imports. Are you happy that maybe, we didn't see a very strong package, that it's a moderate one, that there's no knee-jerk reaction? Where do you stand in all of this?
Hi. Yeah, I think you're absolutely right that the build-up of expectations was quite significant, and therefore I think one was expecting a disappointment today. Clearly, the policy approach has been a lot more, I would say, restrained this time around as compared to back in 2013. And clearly, policymakers do not want to send panic signals. And what it implies is that there is an inherent belief that a lot of the external troubles are driven by external factors and that India's domestic fundamentals are in a much better shape, and therefore there is no reason to announce anything that could, basically backfire. So to speak. So it is restrained, and of course it has disappointed expectations. I think one would wait for more clarity on imports, for instance. But I think, the bigger takeaway for us really is that policy now, and when I say policy, I mean broadly both the Reserve Bank and the government, are moving from what we call the first line of defense, where you let currency depreciate a bit, do FX intervention, positive commentary, to the second line of defense, where we expect actually a lot more policy action going forward in terms of more measures to encourage capital inflows, more measures to curb imports, etc. So it may have disappointed, but I think one should wait for more measures to come. And second, the bigger takeaway for us also was that at this stage, policymakers are focused on trying to finance the deficit rather than bringing about a massive growth sacrifice. So those were the 2 key takeaways, but we are also enthused by the fact that the government has reiterated that it's committed to the 3.3% fiscal deficit target. I think the commitment to fiscal orthodoxy was quite important.
Right. Sonal, also, I just wanted to check that you said that situation was completely different back in 2013, and that time some panic signals had come in from the government regarding the measures that they have taken. At this point of time, the measures that you are expecting now are again, not a panicking sort of a situation. It will be slow and steady, the sort of measures that come in.
I would reckon so, but it's also a function of how external issues play out, because clearly the US-China trade tensions and US monetary policy normalization, these are some of the risks that still very much look on the horizon, and therefore as much as a lot of emerging market countries, including India, are trying to counter the depreciation pressures, the external sector situation clearly seems to be worsening as of now. So we have to be cognizant of the external factor in trying to assess whether policy is successful or not. But you're right. I mean, I think back in 2013 there were lots and lots of administrative measures that were announced, including putting restrictions on how much Indians could remit outside, which basically sent out extremely negative signals. And I think that's one thing we should definitely try to avoid, because barring the current account financing issue, which we clearly are facing right now, the broader macro parameters on every count is actually in a much better shape today. So there's absolutely no need for a knee-jerk kind of a response. But more measures to try to get more inflows. It could be, more opening up on the ECB route. It could be, it could be potentially at some point in time even NRI bond, maybe not immediately, but more such measures could potentially get announced in the coming days.
Sonal, we have $400 billion in forex reserves. The Secretary of the Department of Economic Affairs says that after the new decisions that have been taken, it should help in inflows of $8 to $10 billion. That's really not going to make a dent, is it? And was there a need, therefore, then to do all of this? Or do you think the real bonanza is going to come when the government decides to hike import duties on certain products which are not essential, whether it's textiles or electronics, etc.?
I mean, we of course have $400 billion in reserves, but this year we are also facing a balance of payment deficit of perhaps $20 billion, maybe more. I mean, one doesn't know how the portfolio side will play out. So the gap is a lot more than the $8 to $10 billion that has been contemplated right now. The issue with flows is that, flows are not always driven by domestic pull factors. That could be true to an extent on FDI flow. But a lot of the flows, including FPIs, even ECBs to an extent, are also a function of the global push factors. And those global factors currently are still adverse. And therefore, while the government would have estimated that this is going to lead to $8 to $10 billion, the global factors could imply that the actual collections may end up actually being quite less. But like I said, this is just the first salvo that has been fired. I think the point is that this is one in sort of potentially many more measures that are likely to get announced going forward, and therefore the cumulative effect of all those measures is what is going to have an effect. Should they have just announced something on the import duty front? Perhaps, but I think a lot more analysis needs to be done in terms of identifying, which are the products which are, potentially on the consumer side, but which are those products, what are the WTO rules, and I reckon that, at this stage, a lot of this analysis is going on right now to assess where exactly to put the duties, and potentially we will see that in the coming days.
Right, Sonal. Thanks so much for taking our time.